don't want what we know out there.
How a person can go from really almost nothing to becoming a millionaire by owning rental properties.
He would always buy these flip houses, and I just remember thinking, this guy is crazy. Why would he buy that house?
In the past decade, there's been a huge surge in the peer-to-peer short-term rental market.
Become an insider. So you have to know the rules before you get the game.
Every second counts. So make every second count.
Welcome to the Real Estate Jam. Whether you're just beginning or the best of the best, we're glad you're here. We will share successes, failures, and strategies for the action-taking real estate investor. And now to your hosts, JD, Annabelle, and Melissa.
Hey guys, welcome to the Real Estate Jam podcast. I'm JD, and I have my wonderful co-hosts,
me,
Melissa, and we're here. And this is going to be a really good podcast. We have always had a lot of interest in the VA loan and how people can use that for investing. And today we have the VA loan guy, Jason Wood. He's going to come in and drop some great knowledge on us. Some stuff that you should be sharing with all of your military friends and anybody who has access to that VA loan. There's a lot of misconceptions that we're going to go over today. Jason, thanks so much for finding time for us and welcome to our show.
Thanks, Jason.
Yeah, thank you guys. I'm super excited to be on the show with you and share what I can about the VA loan. It's obviously like a love language for me. I'm super passionate about it. And as an Air Force vet, as you are, JD, we have that camaraderie and that ability to really have a good understanding with those that have served and are currently serving. And that's really been one of the ways that I feel like I'm able to give back, is just to help, in instances like this and just share, and just educate people.
I love that. So is that the fifth love language? I
or
love
sixth,
you said that.
Or sixth, maybe. Yeah. VA loans, maybe.
That was awesome.
Well, if I could find somebody that understood the VA loans, I'd let them love me.
Yes. We have a lot of military presence in our market. And so it's all over the place. And we have, sellers who don't want to let people use the VA loan. And it's just whatever you could share, we would love to share with our viewers, listeners, for sure.
Yeah. Oh man, tons of stuff. So I run into that, even in the market I'm in the San Diego area, huge military market too. And I still run into, selling agents who are opposed or scared or nervous, whatever the right word is, about the VA loan. Right. And there's a lot of myths out there about the VA loan, which are pretty easy to bust. But you got to know what they are and how to bust them. Right. But yeah, there's a tendency for, those listing agents to dissuade their sellers from accepting VA loan offers because there's a perception out there, right? The perception is if you're financing 100% and you're putting zero down, that you are a weak buyer. And you know what? The statistics are actually the exact opposite of that. Nothing could be further from the truth. And that's the part that most people don't know, which I love to teach on. But, when you look at loans, mortgage loans, there's a few basic types, right? You have VA loans, you have conventional loans, you have FHA loans. Like those are the three major ones, right? Mm-hmm. And when you look at those from a performance level, right? Like how do these loans perform, way after the guy's got the loan and they're making their payments and stuff? How do they perform in the portfolio for the lender? Like, are they going into default quickly? Are they paying on time all the time? Like, what do these look like in the future? And that's really the statistic that is so glaring. The VA loan is the highest performing loan in all lenders' portfolio, meaning it has the least missed payments, the least number of loan defaults, the least number of bad stuff happening once they own their home. Conventional loans are second place and they perform worse than VA loans, even though listing agents would perceive them to be a better buyer, right? Because here's someone bringing some down payment, whatever the amount is. So they perceive that to be better. And then FHA is in last place. That has the highest level of default. So when you look at a buyer's profile and you compare, what the average buyer looks like from a VA buyer to a conventional buyer, an FHA buyer, the average VA buyer has a higher credit score than all three, has a higher level of education believe it or not, and a higher median income, household income. So those are all three really important drivers when you're trying to analyze risk as a lender and determine how are these people going to pay back these hundreds of thousands of dollars that we're going to lend them, right? And I think people forget about that sometimes, right? You're getting a mortgage, right? And it just becomes this kind of like blasé term, but you're borrowing six figures, sometimes more, right? That's a lot of money, right? And if you had that cash in the bank, you might not want to spend it because that's a lot of money, right? So, the banks, they look at this and they analyze risk, and it's in the bank's best interest to make VA loans. So for those that maybe are unfamiliar, what is the role of the VA in this whole VA loan thing, right? And that's not understood well. So the VA, think of the VA like Geico. Think of them like an insurance company. So they're not getting in there and calculating income. They're not looking at your credit report. They're not doing any of that stuff. All the VA is doing is guaranteeing that loan to the lender. So they provide a 25% guarantee. So what that means to the bank or the mortgage lender is if you get a VA loan and then you quit making your payments, house gets foreclosed on, that all the lender has to do is go to the VA, say, hey, here's what happened. No questions asked, VA, boom, pops them a check. Here's 25%. We're sorry. Done. So the lenders are guaranteed that. So, even though perception with like listing agents is, oh, they got zero down, they're riskier. In the bank's eyes, they're way safer because your conventional guy with 5% down or 10% down ain't nothing. I got a guy with 25% guaranteed if he bails on this thing. Like, we're way safer doing this VA loan than we would be doing that conventional loan, for example. So, it's in the lender's best interest to do a VA loan over any other. And the VA actually incentivizes that to a degree with the mortgage lenders. And that kind of gets into a little bit of like the underwriting, how are these things underwritten? And the VA, and I'm sure people see this on Google and stuff, the VA has what's called the lender's handbook, right? So this is the VA's guideline book. So here's what it's going to take to get your loan guaranteed by the VA. That doesn't necessarily mean that's the only thing the lenders pay attention to, but they have to meet those basics, right? So if the lender can meet those basics, the VA will guarantee it. When you look at like a conventional loan, you have Fannie Mae and Freddie Mac, who are the providers of guidelines and the money behind those conventional loans. They have a much more rigid set of guidelines or rules that have to be followed when it comes to debt ratios and credit scores and all sorts of things, right? VA's minimum requirements are much less. So there's less for lenders to have to meet when it comes to underwriting on a VA loan. So, we tell people they're looser guidelines. They really are. The VA basically tells lenders, if the underwriter can substantiate their decision in writing, the VA will guarantee it. Conventional loans, if the loan doesn't fit in the box, you're out. So two very different perspectives, right? I think a lot of consumers and most real estate agents out there, especially who are not familiar with the VA loan, have no idea about this stuff. You throw on the icing on the cake is, what a good public image for a lender to be making lots of VA loans, right? That's also another fringe benefit that comes with it. And that's important to the lenders. So they have all these reasons why to make the loan. It's scarier for a bank to make a conventional loan, even though the real estate agents love them. It's way scarier.
I liked what you said about they're viewed as weaker, but to us, I view them as the smartest because, the smartest move you can make is not having to put any money into it because, history shown that it's a asset that's going to appreciate, right? So keep my money for another project. That's what I would want to do.
Right. It's definitely one of my favorite loans to use. One of the things though, and I also believe this is a misconception, but it's very real. One of the reasons that I know that our other real estate agent friends don't like to accept or put that they'll accept VA loan financing is because of the VA appraisal and the certain things like chipping and peeling paint and all of those other extra considerations, I think I've heard more objections because of that part of it and the timeline to get the appraisal done compared to the other inspections and stuff, more so than the conventional loans and people bringing less money to the table. It's that appraisal part that the listing agents have a problem with more so than from my experience. And
that's what scares me for sure, especially because the last few houses we had, they were older houses. So there were issues that we had to get fixed to make them VA qualified. And if you could speak to maybe a little bit of that, that would really be great. Yeah,
absolutely. That's a really common one. So we have to kind of back up to like, what's the purpose? Why did they create this VA loan? Right. So, generally speaking, I mean, the VA loan was created for the GIs coming back from World War II, right? So they could acclimate to civilian life and have a home. And so the VA decided, okay, well, we're going to create this program so they can own a piece of land they just fought so hard to defend, right? And we're going to make it a 0 down payment and all these great perks. So as part of their creation of this, they wanted to make sure that the veteran that was buying this home was not going to be put in a financial hardship because of the maintenance or upkeep of the home. So like the VA loan, for example, is a terrible loan if you've got a total fixer. That's not the good loan, right?
It doesn't work at all.
The VA appraiser is going to chew that into 1,000 pieces. So it's not the loan, even if you got a veteran who's super duper handy. The financing isn't going to work. So we got to understand the why behind the reason they made this. And so they made this part of the handbook called the minimum property requirements, MPRs. And that's what the appraisers are adhering to. But basically, to dumb it down, it says, look, this house has to be free of health and safety related issues. They don't want a veteran buying this house that's going to put them in harm's way, or more of a financially hardship, right? So that's the pretense behind it, so that we understand. So when you look at the appraisers, the appraisers that are going out and doing VA appraisers are the same guys and gals who are doing the conventional appraisal down the street, and the FHA want to walk away. It's the same people, the same human beings, right? They're just approved with the VA to do those. So the VA has a couple extra requirements. They got to do a little bit more on the report, just a little bit more, but they have to have their eyes out for these other things, right? So peeling paint, like that's a pretty common one, right? And people go, oh, it's just peeling paint. What's the big deal? Well, the big deal is, now you've opened the wood up to moisture, right? Moisture can cause all sorts of havoc on wood, right? It can lead to dry rot, can lead to mold, structural issues. Like there can be a laundry list or domino effect of things that can happen by moisture getting onto exposed wood. So the VA, going back to their minimum property requirements, wants a home that's not going to create an issue for health or safety, right? So that's a really common one. And it's a conversation. I think if you're a real estate agent, you're representing the buyer, if you've done enough, you have kind of an eye for this stuff. When you're showing the homes to the client, the real estate agent's less concerned with carpet and drape colors, but really should be looking at, okay, where do I see an opportunity for something to be flagged on this appraisal, right? Because, some of the stuff, even though it might be a pain in the neck, a lot of it's pretty simple. I have appraisers flag things for not having a smoke detector. Like really, run in 20 minutes of a trip to Home Depot, we can have that fixed, right? So let's fix it before the appraiser gets there, right? Like simple, right? Peeling paint, another thing, like the listing agent should know that there's peeling paint out there, right? And if you're in a highly densely concentrated area of military, well, a good listing agent should know, hey, maybe just notes in the MLS, we got peeling paint. It's going to be an issue with the VA. Seller's not willing to do anything about it. Okay. Fair enough. Now, when you go to show a buyer and you see those notes, you go, I know you're going to love this house, but it ain't going to happen unless you want to pay for it out of your pocket. But they're already saying here, they know it exists and they're not touching it. That's fair, right? That's fair. At least we know what we're getting into, right? And it's not like this big rub. But I think that's like a good prepared agent is that stuff. But a lot of these things are simple fixes. Like I see missing covers over the plugs on the wall. What is that? 39 cents at Home Depot and a screwdriver? But we're going to slow down an entire purchase transaction because no one saw that and took care of it. Who cares who's responsible for paying for it if it's less than $1, really?
Right.
let's be honest. We got a $400,000 transaction and we're going to, get held up over a couple bucks. Right. I mean, come on. So a lot of the things are simple and, can they run into some bigger items? Yeah, they can. But I think, in the instance where you run into some big items, that's a big oops on both realtors of missing something major, right? That is going to be some catastrophic event to the whole deal. That might have been a video showing and that's it. And that's unfortunate and it happens, but most of the time they're small things. So it's not something, and I try and explain that to listing agents when my clients make an offer, I follow up with a phone call and talk to them. And, a lot of times they will have that concern. And so I'll just ask them, tell me about the condition of this place. What do you think about this house? Have you walked it? Are we missing any baseboards? No. Did they do a DIY project on flooring and not finish a transition piece anywhere? No. Does it have stairs? Yeah. Did you check the banister? Yeah. Is it solid? Okay. Do we have peeling paint? Do we have a termite issue? Do we have, dry rot? Do we have, have you visibly seen any of these things? I run through kind of the gamut with them and they're like, no. I'm like, you're not gonna have a problem unless there's something you're not telling anybody.
Right.
So yeah, most of it is kind of fear-based, right? They're just worried that this VA appraiser is going to come out there and just, pick apart this house. And if you've got a lot of those little things, they will pick those apart. But like I mentioned, most of them are pretty simple, sometimes like the water heater isn't strapped. I mean, another quick Home Depot fix, but they're going to call that out. It's not safe.
Right. Yeah, those are all good things. And I think especially for our investors that are doing the fix and flip type rehabs where they're coming in, they're fixing them up, all of this information is really good because those are things that they can look at on their final inspection once the rehab's been done, especially in a military town. That there's a chance that you're going to be selling to those military people, or if you want to target those military people around the bases, you need to cover those things. So going to find that VA handbook and being able to identify those before you even list it. Those things really should be done if you're doing that kind of stuff. So I think that's really good information.
And they can print that out. It's free, just go online.
I think one of the points that I really think is going to be good for our investors is a lot of the military guys that I know, the way that I started my investing career was using the VA loan as part of a house hack and doing that. And I know that recently within the last year and a half, they've changed some of the way that they tell you, how you can get more than one VA loan and the county limits and all of that kind of stuff. Can we go into talking about that a little bit? And I'm sure I'll have some questions as it comes up. What it used to be was as long as you were under your county limit, you could get another VA loan. And I know that some of those things have changed, but I'm not very familiar with them. I'm hoping you can help me figure that out.
Yeah, that's a question I get quite a bit. So part of that question is, how many VA loans or how many times can I use my VA loan? And the answer is it is unlimited as far as the number of times that you can use it. So, what's common, for us that we're serving, we hear from a guy in our shop that knows, a tiny bit about VA loans and goes, hey, save it for the big family home. You can only use it once, right? I mean, that's a very common thing. I think a lot of us in the military have heard of, which is not the truth. But, people just don't know, and that's okay. But the VA loan, we did have a really big change on the VA loan, which went into effect January of 2020. So that previous summer, the Trump administration passed the Navy Blue Water Act. So what that act did is it really helped serve the veteran community for those that were in kind of the Korea and the Vietnam era, right? And a lot of those veterans were exposed to chemical agents, and they weren't provided medical care at the VA hospitals if they had exposure to that stuff. So it was just, we got the segment of veterans who are suffering from some of this stuff, no care, right? And he realized it and obviously wanted to do something about it. So this act extended care to them. But, when you add a huge population that's now going to get free medical care, we have other residual impacts of that, which namely are cost, right? So how do we pay for this was kind of the next question. So how they paid for it is they used the VA loan. So the VA loan, everyone is probably aware, has the VA funding fee, right? And There's different levels of that, and you can have it, you can be exempt from it and so forth. But anyways, the VA funding fee, what they did is they increased it a little bit on all the different levels to help pay for this. And then they also removed the county loan limits nationwide. So we have no more loan limit. So if you can qualify for a gazillion dollar VA loan, then you can get a gazillion dollar VA loan, no doubt, right? So that's in theory what's available. So they figured, okay, if the funding fee is up just a hair and we take the ceiling off this thing and people that can qualify for more are financing more, well, that multiple is going to end up as more dollars to the VA. So here's how we pay for the medical care, right? So makes some sense. And so it's added a really cool benefit. What it didn't change is the way that entitlement is calculated for using like your VA loan the next time. And I don't mean the next time like I sold a house, buy a new house. I mean, right. I bought a house, now I'm going to keep it as a rental, go buy another one, but I want to use VA on both. That calculation hasn't changed. So that calculation is based off of entitlement. So this is going to get kind of geeked out for people, but so entitlement, right? This is that 25% guarantee number that the VA provides, right? So we take a home, let's say it's a $400,000 home, right? Well, the entitlement that's guaranteed to the bank is a quarter of that, right? So $100,000 is guaranteed to the bank. So that's the entitlement that is now being used or charged, I guess, to the veteran's certificate, right? So he's got that much used up. So in the instance where, hey, I bought a house a few years back, I'm now going to get PCS orders across the country. I want to buy another house, do 2 VA loans. It's entirely possible. So the way that math is done, however, is we have to know, the county that you're moving to, because now the county loan limits come back to the equation.
Right.
So now we implement using those, and we have to also pull the certificate of eligibility and see how much entitlement has been charged. So we go to a county in the country and, we got the county loan limit. And so we figure out what's the entitlement available in that county. So 25%, right? And then we have to subtract what's already been used. So if we've used 100 grand and in this county, we've got 200 available, we got 100 left, just theoretically. And now we got to figure out how much VA loan can I get now if I've got 100 grand in entitlement for 0 down, which you'd multiply by 4. So in that really rough example, you could buy a home for 400,000 0 down in that rough example. And you can go over that. That's just 0 down payment. So you could go higher and have some down payment and put, and then it goes back to like the old rule. Remember, if you went over the county loan limit in the past, it was 25% of the difference, right, for every dollar. So then that game and that rule, that playbook comes back when you're trying to get home number 2 or home number 3 on a VA loan. That comes back into play.
Because they got rid of the county loan limits in regards to purchasing your first VA loan, are they still updating those county loan limits? Because every year or every couple of years, those limits change based off of the average price of the house. But now that they're not using those to calculate, are we stuck in the January 2020 county loan limits, or do they still update that, or is that completely separate from this part?
Yeah, so it's updated every year. The VA has actually never been the one that puts that out.
Okay.
So the Department of Housing and Urban Development is the one that puts that out.
Gotcha.
That Fannie Mae and Freddie Mac and FHA and everybody go off of. So yeah, that gets updated every year. So, it's probably going to go up every year. So those limits will go up too.
Great. That's really awesome.
It's pretty cool. I mean, there's some real house hacking kind of things you can get into with the entitlement piece, which can be pretty cool. But there's if you buy, there's a couple ways to do it. If you buy small on your homes and don't spend a lot, then you can acquire 2, maybe even 3 homes all on VA loans. You're going to tap out around then if they were all lower priced homes. Right. So that's a strategy. That's a way to do it. The other way I think that is probably one of my favorites to talk about anyways with leveraging the VA loan is, instead of trying to go small in these different spots and pick up 2 or 3 homes, go big. Go get the biggest, fattest fourplex you can find where the math works. And let's go buy that. And so I have, now that county loan limit is removed, it's not that the VA never finance those. They always did finance multifamilies up to 4 units. But in the past, we had those county loan limits, right? And so the county loan limit kind of prevented a lot of people from using the VA loan to buy those properties because you had to have down payment and so on and so forth. And so there was a little bit of a hurdle there. But now with the loan limit removed, man, that really opens up the opportunity for people to get into some awesome real estate. So I have a lot of conversations, and I'm in Southern California. I'm in the San Diego area. So I work with a lot of veterans in San Diego up through like LA County. Where
real cheap properties over there.
They're expensive. They're expensive, right? Yeah. So it can be it can be sticker shock. You got someone that grew up in, the middle of Missouri, and they come out to, San Diego, and I'm telling them to buy a $1.5 million fourplex. You can imagine there's a little bit of sticker shock, right? But if you have that investor baseball cap on, and that's the way you're thinking, kind of long-term investor, building this portfolio of real estate, these multi-unit homes start to make a ton of sense because, as you guys mentioned earlier, your ROI, you're still putting zero down, right? So zero down, you're buying a rental property. I mean, you got to live in one unit. It's a primary occupancy still. You're buying a rental property with zero down. There's no other loan product that exists out there. Zero down rental properties. That's it. Oh, and you're going to get screaming the lowest rates on the market too. So like it's really, really a smart move for those that it works for, right? Works for their family and in location and things like that. They cost more money, but you can utilize the rent from those other units to help you qualify.
Right.
And that's a really big deal.
I think that's a huge part of it, because if you can use the rent from those units to qualify, that pushes your debt or the amount of loan that you qualify for to those higher numbers. That 1.5 million for the E5 in San Diego. That's what helps them, because they're not getting to that number off of their military paycheck, but they might be able to get that with the rents added into that on the debt to income ratio and all of that stuff.
Correct. Yeah. We helped a guy. He was recently, this is probably one of the best numbers run that we've done. We helped a guy. He's E5 up near Edwards Air Force Base, got a recruiting duty for the Army actually up there. And he bought a $900,000 4 unit, and the 3 units rent cover all of the mortgage. So he's pocketing his BAH. And we also got him a seller concession, which in this seller's market is like unheard of, right? We got him a 20 grand seller concession, paid for all his closing costs, and allowed him to buy down the interest rate even. So, I mean, he's so well set up, just got married recently. So he's in like the perfect spot in life to do this. And so he's got $1 million property as an E5 and he's able, and he's smart. So he's going to save all his BAH and just live off his rank pay, which is enough. And in a few years down the road, when the time is right to move on from that property, he'll have some money saved. So he won't have enough left in VA entitlement to use VA again, but he can go use a conventional loan or an FHA loan or whatever on the next home purchase. And if he's got a family, maybe multifamily doesn't work, right? But maybe he doesn't have kids yet. Maybe he goes and picks up a duplex at the next duty station, right? Or whatever. But now he's set with this amazing opportunity. And when he moves out of that unit, now his cash flow is going to be a couple thousand a month positive.
Right.
I love that guy.
Insane.
Well, we can still do that here. I still got VA entitlement to use. I don't know why.
We need to do that. Okay. So wait, I have one quick question on that one. Okay. So that is freaking awesome. And I hope that he shares that with everybody he knows to help other people get on the journey to, financial freedom, because he's definitely on his way. So could he sits on it for a year? So then he shows, a track pattern with rent rolls. Could he then like refinance it? Then he's got all of that entitlement back.
He could, yeah, as long as the equity's there. So yeah, the equity's got to be there. And that I've had some people get caught in that because that was their goal, right? I'm going to buy this house VA, move out in a year, flip it into a conventional loan and go buy somewhere else. So the one thing we can't forget is conventional loans require down payment at the purchase. And also when you refi, you got to have that equity position. So conventional loans don't do 100% financing. So if you haven't made enough equity, then you got to wait or pay down, so you can get into that conventional loan to make the rest of the trick work.
Got it.
But so as long as appreciation continues to go the way that it has, the chances that it will be there, and maybe not in a year, but in a couple of years, that'll definitely definitely be available, especially over in California. I think that they're always appreciating. Now, the opposite, if we have a market pullback or something like that, you might be stuck keeping it in the VA loan for a while. And as long as it cash flows, that doesn't really hurt you, but you're not going to be able to capitalize on it. But I think that's good. You could always sell it, or I guess if you moved out, you could turn it into a rental property and, just if it's cash flowing, it's cash flowing. So there's a lot of options.
I mean, it's going to be a great asset. And I tell people, that's a really good model to look at, right? He's not a high ranking person in the military, and look what he was able to pull off. So, if you could, in a perfect world, fast forward his life 20 years, or let's say 15, when he's at retirement time from the military, so let's say he PCSs 2 more times, pays off, he PCSs 2 more times, picks up 2 more houses. Let's say he doesn't go hog wild, just 2 more, lives in them. That house is going to be nearly paid off, if not paid off. And 15 years down the road, it's going to be worth way more than $1 million, right? It might be worth 2.5 or more, right? So he's got this amazing asset, potentially paid off, which is going to be generating him, I don't know, $5-6 grand a month in cash flow. Yeah. Plus he picked up another property or 2 along the way, which have become rentals over this time. And they're, a quarter or the halfway paid down, and maybe they're only cash flowing a couple $100, but it's cash flow, right? Someone else is paying that mortgage for you. So now he retires, still got a whole nother lifetime ahead of him for another career. Maybe gets another great job or government position or whatever. You got a career number 2 going, dump into your 401k all those years, pick up another retirement when you're done with that. And now you've got all these properties paid for free and clear. You got a few $1 million in real estate cash flowing you, probably more than you made in all your jobs combined, and you're retired.
And the good thing is that covered like all of what his military income was. So now he's sitting nice. Yeah. So now he's
collecting his retirement, and then now he's getting all this. And obviously the VA loan is great, and it gets people into houses that couldn't otherwise do it for whatever reason. But it's a really big stepping stone to help military members find their way to financial freedom. And that's a perfect example.
Yeah.
It really is.
But thank you, Jason.
Oh, my pleasure.
It was great having you. We want to respect your time.
Yeah, definitely.
For sure.
If people need to find out more information, which I'm sure they are, because we just covered like this much of all of the stuff, and we could literally go for another couple of hours talking about all the nuanced pieces of it. Where can we send our military veterans and active duty military guys to get more information from you in how to operate or how to use their VA loan, or if they just want more knowledge about the subject, where can they go?
Yeah, so I put out a lot of content around the topic, and I have a podcast and stuff as well.
What's the name of your podcast?
My podcast is called Armed and Ready.
Nice. Awesome. I love that.
Yeah. So we focus a lot on like the transition out into civilian life and entrepreneurship and stuff. It's a ton of fun. I love it. But so you can find me on YouTube. I also do like a video educational series on the VA loan and mortgage products and stuff. So if you go to VALoanGuyOnYouTube.com, that's my YouTube channel. My website is VALoanGuy.us. And then the Instagram handle's VA Loan Guy. So you can find me there, and I put out content every week. So every Tuesday, there's I call it Tactical Tuesday, which is, on loans and stuff like that. And every Friday podcast comes out. So we're always putting out information.
Great. That's awesome.
And to make sure that everyone knows, you are licensed in 20 states. And if you're not licensed in a state that somebody needs to get a VA loan through, you can help them find somebody, put them in contact with a reliable person, that kind of stuff, right?
100%. Yeah. So I'm licensed in 20 states, pretty much anywhere where there's a decent sized military presence. I'm licensed there for the most part. And then, I'm part of a VA educational group where we actually teach on the VA loan and had to go through classes and certifications and stuff, but we're all lenders nationwide. So we're all part of a group, and we have a Facebook chat that we're on all day long with each other, asking each other questions. Hey, I got a referral, and Wyoming or wherever who can do it. If there's a state that I'm not licensed in, I'll definitely get you connected with someone who's really, really good.
Perfect.
Awesome, Jason. That's all I got. I really appreciate your time. I'm sure that
Yeah.
a lot of people are going to be able to use the information you shared. So thank you very much. You definitely cleared some stuff up.
Yeah,
for
me too. Me too.
Great.
Thank you.
Great. Well, I'm glad to help, guys. Thanks for having me on the show.
Thank you, Jason. Have a good one.
Have a good one.
You too. See ya.
Thank you for listening to the Real Estate Jam. We hope you enjoyed today's episode. For more information, check out our website, therealestatejam.com, or find us on Instagram, Facebook, and Twitter at The Real Estate Jam. If you have any questions, feel free to drop us an email at therealestatejam@gmail.com. See you next episode.